Hello everyone, this is Jesse Kovacs coming to you with your monthly educational economic update for December 2016. In this month's video, we'll discuss some of the major headlines that influence markets in November and provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Well, looking back on November, no one could argue that it was a boring month. After a long, exhausting presidential campaign, Election Day brought results that few people were expecting. Just that day, the New York Times had given Hillary Clinton an 85% likelihood chance of winning the election, based on a number of both state and national polls. Now, we all know how the story actually played out, and what might be even more surprising than Donald Trump's victory is how the markets responded. Rather than experiencing the sell-offs that many experts predicted, the major indexes have shown tremendous growth since the election. In fact, the Dow has added over 1,000 points in November and went above 19,000 points for the first time ever in the history of the markets. Now, the S&P 500 and the NASDAQ also reached record highs last month. And these noteworthy market increases are just a few of the positive economic indicators that we saw in November. Now, in my last monthly video, I talked about how the gross domestic product, or GDP as we call it in the financial markets, had its biggest gain in 2 years, showing that the economy was growing more quickly than most economists expected. Well, when the government released its revised GDP numbers in November, they revealed that the economy grew even faster than they previously thought. So after years of sluggish growth, we're happy to see that the economy is picking up its pace once again. The employment picture is also showing an equally positive outlook too. Unemployment remains very, very low, and personal income gained another 0.6% in October. So if you look at this year's gains as an annual rate, incomes are up 5%. Now, these meaningful increases mean that Americans have more money in their pockets and will likely increase their spending to match. Now, consumer spending is already up 4.2% over the last year, and we anticipate that it will continue to grow, thanks to the greater personal incomes and low unemployment. And since consumer spending accounts for more than 2/3 of that gross domestic product, the combination of stronger employment, wages, and spending could help advance our economy even faster. We expect that rising income and consumer spending will result in a solid holiday shopping season, which will further help GDP growth. And one place where Americans may actually feel a budget tightening is when they go to the gas station this winter. On November 30th, OPEC, which is the cartel of 8 oil-producing countries, agreed to at least somewhat limit their supply to the market in hopes of driving crude oil prices above their current low levels. Now, as a result, you might experience higher gas prices in the coming months. But don't panic. We don't anticipate crude oil will climb anywhere near the record highs of 2008, which were nearly 3 times more expensive than what the market is currently paying today. These days, the United States and the other countries outside of OPEC actually produce more oil than they ever have in the past, which helps to keep the prices lower than during the Great Recession. Now, as we look across the data for November and for 2016 as a whole, we believe the economy is continuing to strengthen. All signs are currently pointing to the Federal Reserve raising interest rates when it meets in December. Fortunately, the markets and the economy seem poised to withstand moving back toward more historically normal rates. Between Brexit, the United States presidential election, and more, this year has reminded us again and again and again that no one has a crystal ball and no one can predict the future. But I'm happy to say that recent market economic reports and market performance give us many reasons to be thankful and to look toward the future with anticipation. Well, that's it for this month's Educational Economic Update. Once again, this is Jesse Kovacs with the Kovacs Financial Group, signing off for the month of December 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal situation with us, please give us a call here at the office at 732-306-8100. We'd be happy to talk to you about your situation. On behalf of the Kovacs Financial Group, I'd like to wish everyone out there a happy holiday season, a Merry Christmas, and a Happy New Year. Take care.